I hope everybody is having a wonderful Thursday. We're gonna wait till some people come in and we're gonna get started. Welcome to Invest Like a Pro Athlete with Lonnie. Basically, the title we're gonna talk about is the top stocks and ETFs I am buying right now. I'm gonna wait till people come in and then I'm gonna get started. But I hope everybody is having a wonderful Thursday. All right, we're about to get started right now. In this video, I will tell you what stocks and ETF I am watching, and I'm gonna explain why they stand out. I'm gonna share my thoughts, my long-term investments, whether you are building your first portfolio for looking for new investment ideas. Also in this video, I'm gonna talk about, I just talked about stocks I'm watching, ETF that I'm investing long term, market outlooks, portfolio strategies. What portfolio strategy? What that means is you should always rebalance your portfolio. And then another thing we're gonna talk about is risk management. That's mean what risk management mean is the money that you can afford to lose. Remember that risk management is the money that you can afford to lose. All right. See me, I'm a long-term investor. I don't day trade. I don't swing trade. I don't do none of that. I'm a long-term investor. Just remember this video is pretty much education purposes only. Remember, not financial advisor. Always do your own research. All right. All right. The first ETF that I'm investing in for myself and for my son is VOO. All right. Ticker symbol VOO. That means it have low cost exposure. Is exposed to the 500 large companies in the U.S. All right. It expense rate is 0.03. That's really cheap, guys. That's really cheap. All right. The next one I'm invested in is VTI. That's another Vanguard. All right, guys. It's on nearly the entire U.S. stock market. All right. That's a good one to have in your portfolio. Just remember, these are long-term investments right here, guys. I got both of these. All these things I'm gonna name off is what I'm holding in my portfolio in both my Roth rate and my original brokerage. All right. And then another one is QQQM, which is the Nasdaq 100 exposure, which have lower fees than the QQQs. All right. They're just his little sister, little brother, or whatever you want to call it. All right. They track the NASDAQ. That's mean they track uh those big companies like Apple, Google, Microsoft, Eli Lilly, and all those other companies like that. And then also I have SEHG. D is a high quality dividend company. It might not move as fast as VEO, VTI, or QQM, but it's a good stable dividend. It's pretty much diverse. So it got your oil, it got technology, but it's not so much. But mainly it's pretty much with oil and all that mainly inside this ETF here. And then we got another Vanguard, VXUX, is an international diversification. All right. I also have that one in my long-term portfolio. All right. All these guys are in my long-term portfolio. All right. Every time I get paid, I make sure I put my bill money aside, and I always put money to all these funds that I have. So I what they call it called DCA, which means dollar cost average. I know a lot of people don't have $100, $300, or 250, or whatever the case may be with these ETFs, but you can also dollar cost average in them. All right, just remember that you can dollar cost average. All right. Because we know the bills are high, we know the rent is high, we know everything is up now with gas and everything. But guys, if you are looking to build long-term wealth, don't be scared to dollar cost average it. All right. All right, then this last one is another Vanguard. It's VUG. It's the large cap growth leader, which means your Apple, your Google, your Tesla, your Nvidia, your Palantir. It's all inside this one. All right. I hold all of these guys, and they are long-term holds. Long term mean down the road, because I'm still investing into all of them. Because I want to be able to build wealth for my family, so they don't have to worry about anything. All right. Now, if you want any individual stocks, guys, with strong long-term potential, all right, we got your Nvidia, we got your Microsoft, we got your Broadcom, we got your Amazon, all right. Those four right there, guys. Whoo! All right. Those these all four of these are great companies right here. Now I'm gonna tell you the only two that I'm actually holding in my portfolio is Nvidia and Amazon, because I always use Amazon every day. Everybody use Amazon, so of course you're gonna want to use something that you use on the daily. So I use Amazon, so I'm gonna pass that on to my son. All right. These companies gonna continue to benefit from the AI infrastructure, cloud computing, and enterprise software demands. All right, guys, remember that. AI is the future, guys. Remember that AI is the future. These are some great companies here, guys. And then the financial sector, you got your JP Morgan Chase, you got your Visa, and you have your MasterCard. These are great companies right here, guys. Now just know that if the market do go down, these guys right here will get hit. So basically, if we have the like if it's a tax hike, like we said that we're gonna get in the year 26, we're supposed to get one of them. These guys right here will be infected harmly. So just watch these stocks. These stocks are going to go down, guys. These stocks will go down. This financial sector will go down because they're going to be raising the rate hikes. Just remember that. But also, guys, these are great companies to hold long term. I don't care what it's doing in the short term. It's all about long term investments. All right. But if you was building a new portfolio today for a long term investor with 10 years on horizon, all right, I'm gonna give you the breakdown of these things right here. All right. Remember, do your own research. This is not financial advisor, guys. This is education purpose only. All right. All right. You can put 50% into VOO, VOO. These are the 500. large company in the United States. All right, guys. Then you do 20% and QQQM. Remember, those are big tech companies, guys. If you believe in AI like I do, it's the future, guys. You can invest in QQQM. It's the, like I say, it's the little sister. It's the little brother to QQQ. All right. All right, guys. Now, if you want individual stocks in there, guys, you can break it down like this. You can put 40% into VOO, 20% into QQQM, all right? And then you can put 10% into Nvidia, 10% into Microsoft, 10% in JP Morgan, and then also 10% in Eli Lilly. So that's mean, guys, hey, that's mean pretty much you're gonna be diversified, guys. So when something going down, but also things will be going up, guys. Just remember that. All right. So don't be scared to invest. Don't go out there and listen to people say, "Hey, you need all this money to start investing." No, that's not always true because we don't nobody got the money like that. All right. Remember, dollar cost average, guys. Remember that dollar cost average. All right. So, cause we all know we don't have $300 to go into the three Qs. We don't have $300. We don't have $700 to go into VTI. We don't have that. But you know what we can do? We can also dollar cost average into these things, guys, to build long term wealth. That's what I'm here for, to help you out, guys. So if you're looking to learn how to invest in yourself and into your future, just comment below and I'll get back with you. And then also you can also look at this one right here. I just looked on my laptop and stuff like that. Now a top broad market, comma sector ETF. It's called Stake Street, which means your SPY M is also a large cap company also that tracks 500 company in the US. Now that ratio is 0.02. It still track your Nvidia, still track your Tesla, still track your Microsoft, your Google, and stuff like that, guys. But it's a little cheaper. It's only like $83. All right. And then it's another one. You got an iShare semiconductor ETF. If you believe in semiconductors, you can go with this one right here, SOXX. If you believe in semiconductors, you can go with that one. And that one right there is now $523 a share. But like I say, you can dollar cost average into it, guys. You can dollar cost average, all right? And then there's another one right here. This one right here is non-US diversified. These funds have been seen notable outperforming by capture global market momentum. This right here is IXUXS. All right. That's pretty much is the company outside the United States, like in France, Germany, and all that, guys. You can also get that ETF. All right. And for balance and bond ETF, you got a Fidelity investment grade bond ETF, FIBI. All right. You got FIGB. All right. Is an exposure to treasury, is a corporate bond and mortgage backed. All right. It's just a security bond, guys. All right. You can always get that and make sure you diversify your portfolio. Now, when you want to go into like bonds and stuff like that, you wanna wait till you like 50 years old. That's when you really wanna try to limit your risk. That's what I mean about limit your risk, especially when you get older in age, like 50. Alright? because me right now, we know the market is up and down and whatever. I don't care what the market's doing. I'm a long-term investor. I'm on the long run. All right. But yeah, no shade to anybody that day trade, swing trade. No offense to them, but hey, do y'all, all right? That just that's not for me because I don't have time to continue to look at my phone. No, I don't want to be stressed out. So that's why I'm an investor. That's why I go out and I invest into great companies and ETFs because I don't care what's it doing in the short term. I always remember thinking in my head, I'm in this for the long run. So if you're looking for help, any kind of help, trying to learn how to invest in yourself, you can always comment below and get with me, and I can definitely show you how. All right. I've been doing this for 3 years. I wish I would have started, somebody would have told me sooner about investing. But yeah, because we all know Social Security is not going to be there for us guys that's in our, 20s, 30s, and all that. It's not going to be there. So that's why I want to teach a lot of people about investing in themselves. I don't mind helping people out. But remember, whatever I say, you just go and do your own research on these ETFs that I gave you, like VTI, VUG, SEHD. Also, I'm gonna throw another one in there, SEHG. Now that one right there, it does pay dividends, but it's a growth ETF that tracks these tech companies like Nvidia, Palantir, Google, Microsoft. It tracks all those guys. But the dividends, I can live with that because guess what? I know it's a growth ETF, so it got all these great AI companies in there. And it's cheap. It's cheap too. It's only $33 right now, guys. It's only $33. All right. So if you want to learn how to invest, comment below and get with me. Oh, then here's my little cousin. What's going on? So yeah, guys, just get with me if you want to learn how to invest in yourself. Just remember on this channel, I also talk about sports. I do talk about investing in yourself, and also I sprinkle in a little politics here and there. Uh, like I said, you got to keep everything balanced. All right. And also, when you're investing, try not to worry about the news and stuff like that because we all know things that goes on in other countries and like that too affect the stock markets as well. All right. But yeah, guys, if you have any questions about any stocks or ETF or anything like that, don't mind to hesitate to comment below, and I'll try to answer your question. But yeah, but to be honest, I wish I would have started when I was in my 20s, to be honest. I wish I would have started investing when I was 20 years old. I wish I would have had somebody to teach me. Basically, who taught me about starting investing is the guy that I work with now. He the one that led me to start to invest, and I did my own research on stocks and ETF like that. For me being a first time investor 3 years ago, I was like, I didn't know much about these companies or anything like that. And he was telling me like, hey, don't focus so much on these individual companies. You can always get into the ETFs and stuff like that. And I was like, what is the ETFs? I was like, okay, let me go and look this up. And I pulled up so many ETF. I'm like, oh, okay. These are ETF. Okay. So that's when I started investing 3 years ago. So basically, man, I'm just trying to build long-term wealth because I know we all don't want to wake up and work 9 to 5 until we like 70 years old and whatever the case may be. And I know we all got plans that we do want to retire before 62 because I would, to be honest, that's my goal to try to retire at 60 years old. So hey, like I say, it's better late than never. But I hope everybody having a wonderful Thursday though. So if y'all have any question about growth stocks, ETF or anything like that, just go ahead and comment below and I'll answer your question. Oh yeah, I also want to talk about another stock that I'm looking to buy, but I want to wait to drop like under maybe $100. It's Palantir. It's pretty much a high performance software and AI pick. So that's the one I'm looking to start a position in. Also, I'm gonna say this last thing right here, and then I'm gonna hop off for tonight. And I just looked this up right here, and you can definitely do your own research. This is just educational purpose only. All right. These right here is pretty much ETFs right here. And a couple of these I have in my long-term portfolio. So you have XLI, you got XLV, you got XLF, you got XLRE, you got XLE, you got XULU, you got XLK, you got XLB, you got XLP, you got XLY, and you got XLC. Um, so basically, these are also ETFs that tracks. You got your healthcare in there. You still have your consumer staples, your water ETFs. You have your electricity. You have your oil. Your pretty much your oil and gas. These ETFs is pretty cheap. It ranges from either 30 to all the way up to $160. Remember, you still can always dollar cost average into these ETFs right here, though. So I'm about to read the things I just read off to you. So you have your XLC is pretty much your communication service ETF. All right. And then you have your XLY, your consumer discretionary. Okay. Then you got your XLP, custom staples. All right. And then you have your XLE, which is your energy ETF. And then you have your XLF, your financial ETF. Okay. You got your XLV, that's your healthcare. Then you have your XLI, which are your industrial ETFs. Okay. Then you have your XLB with materials. All right. And then you have your XLRE, that's your real estate. So that see, you don't actually have to go out and buy any real estate property. You can always invest into this right here, guys. Remember that. You can also invest into this here. You don't have to go on and get real estate properties. Okay, guys? All right. Moving along, we got X LK, that's your technology. Like I say, that's your still with your Nvidia, your Palantir, your Tesla, your Google, your Microsoft, and so forth on. And it's for a reasonable price too. And then the last but not least, you have your XLU, that's your utility ETFs, all right? So the up to date on these guys right here, the up to date on them. All right. Okay. The XLV, which is your healthcare, leading away with 4% on the day. All right. Then right below that one is your XLC. That's your communication service, which is up 3%. All right. Then next underneath that one, you got your XLY customized discretionary is up 2.62%. All right. Then your next one is up. It's XLF, which your financial, it is up 1.97%. All right. Moving along here, you have your XLI, which is your industrial. It is up 1.75%. All right. Then your next ETF is up is you have your XLK, that's your information and technology ETF. It is up 1.40%. All right. Now we are getting to the negative, okay, guys? You got your XLB materials. It is down negative 0.27%. All right. Then below that one, you have your XLRE, which is your real estate ETF, and that one is down a negative 0.74%. All right. Moving along to the next one, it is XLP, which is your current staples, which is down a negative 1.35%. All right. Then your next one that is also down in the red is your energy one, which is XLE. It is down a negative 1.42%. All right. And then last but not least is your utility ETL, which is XLU, which is down a negative 1.69%. All right. All right, guys. I think that would be it for the show. I will be back Sunday, right around this time, 7 p.m. If you want to learn anything about stocks or sports or anything like that, trades, just come back and follow. Invest like a pro athlete, guys. Good night.